Hey everyone and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. Thank God it's the weekend, right? What a rough week in the stock market. Now today's video, as always, we're going to go over numbers out of China, out of Europe, United States, of course the production delivery numbers. I'll share my thought on all of the Q1 figures that we've got. It's going to be a pretty short video this week because, well, not much has happened around Tesla. So let's dive right into this. If you enjoy this type of videos, hit all the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description. Any the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with the Tesla weekly insured figures for the week that came in at 20,700. Some say 21,000. Let's take the lower number just to be sure. So another very strong week in China, which also means that we closed out the quarter right now at 136,900, which is higher than where we were last year, despite a Model Y refresh, which, to be honest, is probably a good sign going into Q2. Q2, we're going into that quarter where, well, I do believe that the Model Y refresh ramp up is complete. So Q2, I would expect it to be a bit better, although you might say seasonally weak quarter. But now that we don't have any refresh, we don't have Chinese New Year's and all of that, we will probably get a better picture in Q2. And not just for China, by the way, it's going to be for every other region as well. Because right now you can make the case, okay, brand damage, but how much? How much of the big miss in the production and delivery figures was from brand damage? And how much was it from, well, not having the best-selling vehicle available? Right? The Model Y refresh. In Q1, you can debate it, right? It's going to be an endless debate. Some say 90% is brand damage and only 10% is the Model Y refresh, which in my eyes is completely ridiculous because the Model Y, if the Model Y, let's say, was not the best-selling vehicle on the planet for 2 years running or not even close to it, then I would say, okay, fine, you might have a point. But since it is, then I don't think it is 90% because of the brand damage. There's definitely a percent that is because of the brand damage. But I do still think that the majority of the hit is because of the Model Y refresh, which is why I believe that Q2 will give us a better picture. How much brand damage? How much Model Y refresh? Looking at the model mix, Model Y, Model 3, as you can see here, Model Y continues to ramp up quite nicely. Model 3 says the same. I believe Model Y for the last week was 14,600. And remember, we also have that extra day on Monday, the 31st day of the month, which is not calculated in last week's figure. So it will add a little bit more, not much. Now for March specifically, if you look at the, well, I think it says here SUV category, the Model Y is the number one vehicle here, despite it being more expensive than the rest. Model 3 is number 6. And then number 4 here is the Xiaomi SU7. I mean, these guys have been performing extremely well. Moving on to the other countries. So we've got here an estimated number for the United States. Currently, apparently, Q1 is down 13% year over year. Here as well, you can say mix of brand damage and the Model Y refresh, but it is down 13% year over year. If we look at the select European countries, which make up around 60% of the sales in Europe, which are UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland, currently, well, other than that last day of the month, we are down 25% year over year, which you might say is quite a lot, and some might say, oh, I actually expected a bit more, which if we're going to look at France, Australia, and Germany, you'll see why I said that. For example, here, Australia, Q1, down 60% year over year. If you look at Germany, down 62%. If you look at France, down 41%. Now, luckily, if we look at the UK, that has actually been doing better. That's up 6% year over year, and that has become Tesla's biggest market in Europe. Although, well, you can say Europe, yes, Brexit. So in that continental Europe, let's say. Then looking at a big car country, which is Japan, that number is up 57% year over year, but just an FYI. Of course, some people will not tell you this, but they'll just tell you, oh, they grew 57% year over year in Japan, which is great. but it's only 1,200 vehicles approximately. So although great growth year over year, just a small number overall. But I mean, Q1 is Q1. You can say whatever you want. You can try and make your case and to say that the majority of the hit that we've seen in Germany, in France, in other countries in Europe is because of brand damage. You can also make your case that it is purely because of the Model Y refresh. And again, I think we will only know for sure 3 months from now when we get a clean quarter like Q2. No New Year's, no refreshes, maybe a new model announcement, right? Because that's something we have to talk about. Because right now, I mean, we got the production and delivery numbers. Production came in at 362,615. Deliveries 336,681. Big miss. Of course, that was a very, very big miss. And there was also a very big question, which I'm going to ask here again, because I have nothing to hide. When the numbers are good, I'll show you good numbers. When the numbers are bad, I'll show you bad numbers. If you don't believe me, when Tesla was above $400 or close to it, and we had that Q1 earnings report, and suddenly the stock went up, my very first video about Tesla after that earnings report was titled something like "It doesn't make any sense." Because it didn't. It didn't make any sense. So for those that are trying to say that, oh, you're only bullish when things go up and bearish when things... No, not at all. Not at all. So first up here, this big miss, okay? Big miss, probably the worst quarter that we're going to have for Tesla. Then forget about the Model 3 and Y, okay? Model Y refresh, that's fine. They say here, while the changeover of Model Y lines across all 4 of our factories led to the loss of several weeks of production in Q1, the ramp of the new Model Y continues to go well. So if you believe what they say here, loss of several weeks of production in Q1, which means tens of thousands of vehicles, which could have been, well, a beat. So I don't think it is 90% because of the brand damage. But okay, the other question I have here is the other models, the S, the X, and the Cybertruck, right? I was skeptical before about that 2 million pre-order number that was flying around, right, for a long, long time. How come that is getting hit as well, right? Why is this thing not growing or not moving at all? Also a question I'd like to have an answer to. Correct? Correct. Moving on here to the energy side of things, they deploy 10.4 gigawatt hours of energy storage products. So that side of the business is of course doing extremely well. It's down a little bit quarter over quarter, but fine. I mean, if we have 4 quarters of the same as Q1 or Q4, it's going to be another amazing year for the energy side of the business, and it's going to be amazing for the Tesla business as a whole. Since this is growing faster, it's going to be a larger chunk of the overall revenue and profits as well. They also told us a couple of extra things here. In the quarter, they opened 2,200 supercharger stalls. That's up 17% network growth year over year, 1.4 terawatt hours delivered, up 26% year over year, 657 million liters of gasoline saved. It's 1.5 billion kilograms of CO2 offset, 42 million quarterly charging sessions. That's up 27% year over year annual growth. So amazing figures here, amazing figures. Moving on to a fake article suplex here. So Electrek, which to be honest has been quite a long time since I've taken that publication seriously, they said Tesla Semi suffers major delays and dramatic price increase. And then you have Fred here, retweets, I know everyone is busy with tariffs, but it looks like this big news is falling in the cracks. No other outlet has picked it up yet, even though I posted at 5 a.m. Why do you do this at 5 a.m.? I don't know. Tesla Semi and major trucking company Ryder confirms delays and massive price hike in the electric truck program. To which someone at Tesla, specifically when it comes to the semi part of the business, Dan here said, no change to schedule and multiple incorrect conclusions. The future is bright, electric, and cost effective. So Fred, next time, maybe sleep at 5 a.m. On the non-Tesla part of things, Rivian delivered 8,640 vehicles in Q1, down 36% year over year, in line with expectations. The company produced a total of 14,611 vehicles In the same period, Rivian is also reaffirming its 2025 delivery range guidance of 46 to 51,000 vehicles, which means no growth for them. And I mean, here as well, it's down 36% year over year. What did the CEO do? Is the brand damage, or is this a demand issue? Maybe demand and pricing issue. What do you think? Now, I would also want to maybe throw an idea here. Rivian is worth around $11 to $12 billion at the moment. Me personally, I like the vehicles. They look good. Everybody seems to like them. Maybe it is expensive. But don't you think that Tesla is missing these types of vehicles? This form factor? Wouldn't it be an idea for Tesla to buy Rivian and keep the name? Keep the name Rivian. It's going to be a sub-brand, but start to use the manufacturing know-how, the tech stack, software, FSD, battery, and all of that from Tesla in order to reduce the cost to make these vehicles. Is this idea too crazy? I mean, let me know. Let me know down in the comment section below. And who knows? Who knows? Maybe in the future, RJ might be the CEO of the whole thing. But that's maybe a bit too much, right? That's maybe a bit too much. And so if we look at the stock after two green candles and an attempt to stay above the uptrend line and above the 20-day moving average, well, last week was a bad week. So red candle here, we're back under $240. RSI is low. And well, we're back to prices not seen since 2 weeks ago. To be honest, this week I thought Tesla would get hit much harder. There were some days where Tesla was down 3%, 5% or so, where other companies like a Meta or Apple or an Amazon were down 7 to 9% or so. Interesting. Of course, I mean, Q1 earnings report is coming up in the next couple of weeks. I think we can all agree that that's not going to be a great one. But the focus is, of course, going to be on FSD rollout. Of course, if you remember, the video at the start of this video was actually FSD in, I believe it was Amsterdam. So the rollout in China, rollout in Amsterdam, things are moving in the right direction. And then the big question is, what about the next models, right? What about those affordable models? Are those still on track to be released mid-2025? Yes, no? Are those going to be cheaper Model Ys and Model 3 or completely new ones? Remains to be seen. I found it quite strange that we haven't seen one leak. Remember, the Model 3 refresh, the Model Y refresh, we've had leaks weeks and months before the official release. So far, zero. Maybe it might be a cybercab with a steering wheel, like this form factor. Maybe, maybe not. Remains to be seen. Overall, that's about it. Do share your thoughts and comments down in the comment section below. Like, subscribe, and I'll see you all in the next one. Bye-bye.